Today, we're going to talk about two strong buy high yield dividend stocks that I think you should get on your radar. So stick around. Hey guys, welcome back to the TipRanks YouTube channel. I'm Richard Allen. We're going to talk about two strong buy high yield dividend stocks. Now, there are many differing opinions about dividend stocks. You can ask any investor and they're probably going to have a different opinion from somebody else. Some people think that it's a good way to diversify in a bear market so you don't lose as much. Some people think it's a great way to diversify in a bull market. Some people, if they have a lot of cash on hand, they like to park that money in a dividend fund so they can make a little extra money on the side. So there's a lot of different opinions about dividend stocks, but I wanted to give you two different strong buy dividend stocks in this market right now that are both strong buys but are also in different sectors. One is in the real estate sector, one is in the energy sector, and that can be a really good way to diversify your portfolio if you're into doing that sort of thing. And it's usually a good idea to do that if you're a long-term investor. Now, we're going to jump right over to this article. This article is titled Two Strong Buy Dividend Stocks Yielding at Least 7%. So let's scroll down here. The first stock on the docket is a real estate investment trust, or REIT. The name of the company is Ready Capital Corporation. REITs, which buy, own, lease, and manage real properties in the residential, commercial, and industrial sectors. Ready Capital, based in New York City, deals mainly in commercial properties as well as real estate loans and mortgage-backed securities in the commercial sector. The company also originates new loans, providing financing and servicing for mortgages on commercial and multifamily properties. The company reported on June 28th that its second quarter 21 business with Freddie Mac in the small balance loan, SBL, and small multifamily bridge to agency businesses increased more than 36% from the first quarter. RC closed on 72 of these Freddie Mac loans worth a total of $223 million and had a firm Q3 pipeline of an additional $130 million. Also in June, the company declared its Q2 dividend payment at 42 cents per common share. The declared dividend is the highest since March of 2020 and marks a reversal of the pared back payments implemented during the corona pandemic. The dividend annualizes to $1.68 and yields over 10%. It's a pretty darn good dividend. Covering this stock for BTIG, analyst Tim Hayes takes a bullish view, and the dividend is one reason why. He says strong first quarter 21 momentum has carried into the second quarter 2021, which should drive very strong results and dividend coverage. Management is confident that it can achieve a 10+% ROE even after PPP earnings have run its course, as it continues to take market share in high ROE government-sponsored businesses and the broader small business commercial market. As RC continues to scale and increase origination volumes, we expect there could be additional upside to the dividend, which has increased over the past 4 consecutive quarters and offers the most attractive yield in the sector. Let's check and see how RC is doing today in general, but also let's check and see what the analysts have to say about RC. Now, Ready Capital Corporation comes in with a strong buy based on 6 analyst ratings with an average upside of 11.44% over the next 12 months. They also performed pretty well today, 0.74% up on the day. Guys, so let's take the dividend in mind, right? There's a 10% dividend potential for over 11% upside, potentially more, potentially less, but a guaranteed 10% dividend per share. Now, these REIT stocks and these dividend stocks in general tend to be a little more stable than the rest of the market. In a bear market, they tend not to fall as much, and in a bull market, they tend not to rise as much. So a dividend stock can be a good place to place extra cash if you have it, and in order to earn a little bit more extra income. It's a good way to diversify your portfolio. A lot of people will allocate a certain amount of money to dividend stocks to have a little extra income and a little more of a compounding effect on their money. Now, let's jump over to the second company. The second company we're going to talk about is in the energy sector. It's Enterprise Products Partners, ticker symbol EPD. Enterprise Products is a midstream company working in the transport segment of the energy sector. Specifically, Enterprise moves the product from the wellhead to refining, storage, or transport points. Enterprise gathers, treats, processes, transports, and stores natural gas, transports, fractionates, and stores natural gas liquids, and operates NGL import-export terminals, and operates marine transportation assets on the U.S. Intercoastal Waterway System. They do a lot. The company's operations are centered in Texas and Louisiana, but pipelines, storage, and refining facilities extend into Appalachia, the Midwest, the Rocky Mountains, and the Southeast. Enterprise boasts over 50,000 miles of pipeline in total, along with storage space for 160 million barrels of oil and 14 billion cubic feet of natural gas. Increased demand for fuel as the COVID restrictions were lifted powered EPD's revenues well past their pre-pandemic levels in the first quarter of this year. Enterprise reported over $9.1 billion in Q1 revenues, up 22% from the year-ago quarter. EPS was 61 cents, higher than the last three quarters, although flat on the year-over-year basis and 20% higher than the analyst estimates. Enterprise's cash flow, like the revenues and earnings, were sound. In Q1, the company reported cash flow from operations of $2 billion, matching the year-over-year number. In the 12 months ending on March 31st, the company paid out 60% of its cumulative cash flow from operations in distributions to shareholders and reported a free cash flow of $3.1 billion for that period. The company's dividend has been steady for the past 2 years. The company has a 12-year history of reliable dividend payments and gradual growth. Earlier this month, Enterprise declared its Q2 payment of 45 cents per share at an annualized rate of $1.80 per share. This gives a yield of 7.3%, more than triple the average yield found among S&P listed stocks. Now, not as good as the REIT, but this is a good potential company to be invested in as well, and we're going to talk about why here in a second. Top analyst TJ Schultz, rated in the top 2% of Wall Street stock pros, is impressed by this midstream company, and it shows in his commentary. When there are issues, EPD has opportunities. This was demonstrated in the first quarter. EPD beat consensus by 14% due to marketing opportunities induced by Winter Storm Uri. We continue to view EPD as a core MLP holding that can grow distributions through commodity validity due to its large and diversified asset base. He continued, the partnership's multi-year organic growth backlog helps provide visibility on long-term distribution growth. EPD has grown and should continue to grow its fee-based cash flows as announced projects enter service and ramp. The large market capitalization relative to the rest of the midstream MLP space should mean easier access to and lower cost of capital and better trading liquidity. We believe the diverse asset base adds stability to the cash flows and is defensive in a softer equity market or energy tape specifically. All right, let's see how EPD is doing and what the analysts have to say about EPD. Now, EPD was down slightly today, down right around 1%, including after-hours trading. But Enterprise Products Partners comes with a strong buy based on 6 analyst ratings with an average upside of 20.43% for EPD. Now, we have a 7% dividend plus this 20%. So this is right around a 28% potential opportunity over the next year. So pretty good stuff. And then if you reinvest those dividends, you can have more of a compounding effect with these dividend stocks. Guys, let me know what you think about each of these dividend stocks. Do you have a favorite? I would love to hear your opinion. Thank you so much for joining me for another video. Remember, don't miss my Power Hour update at 3 p.m. Eastern Standard Time, Monday through Friday, right here on the TipRanks YouTube channel. Guys, thank you so much. I'll see you tomorrow.